right, we can talk a little bit of shop.
Yeah.
And we got our friend Scott here who asked us a question, and we thought we'd bring it to the channel. And I think you guys in comment land are going to be interested in this and probably give feedback as well. I guarantee there's going to be a bunch of comments coming in, but crew feel like throwing in your 2 cents. So you had said, Scott, you had like $10,000 to throw into the market, and you asked us where you should put it. Is that right?
Well, first, I don't even know where. Like, do you go on Amazon and buy stocks, or like how does that work? Where do I sign up somewhere?
Have you never heard of Robinhood in your entire life?
I've heard of it, but I just
or like TD Ameritrade or any of those.
Heard of it? Yeah, I mean, you hear, you see
just
ads or you hear
download
talk
those
about it. I
apps.
know
Yeah.
there was like some drama with Robinhood a year or two ago, but like I've never like gone to their website and
Just like you open a bank account, those are just brokers. Just think of them as banks to buy stocks.
Got it.
You just do that. So Robinhood's essentially a broker. So you put money in, you open an account, you put money in, it looks like a bank account. And the only difference is once that money's in, you can actually pick stocks to trade.
got it.
I might just make a trade and I'll show you on mine while we're here. But there's a couple questions I have. So the question is going to become, you got $10,000, where do you spend it? Now, this is not a channel with financial advice.
Yeah, right.
But this is my buddy. Is there like an exception to the rule?
Yes.
I'll tell you what I would do. Okay. You do whatever the hell you want to do, bro. So I have some questions. What's your risk tolerance? So can you stand like big swings, or are you more conservative as far as money's concerned? Like big losses?
Closer to the mic.
So
What's that? Oh.
So back in the day, I used to street race. Or there's no cops watching this show, are there? So I used to street race a lot. And if you would bet on a race, once you bet, that money's gone in your mind, right? Like you just have to know that, like, I'm willing to lose that. So like if I look at this, it's got to be the same thing. Like if I'm going to put this money into the market, it has to be money that if I don't ever see it again, like that's okay. But hopefully,
Okay.
I'll get something back.
What's your time horizon? When do you need the money, like to pull the money out? If you had gains, like, do you have a long time horizon? Would you want to pull it out sooner than later?
I feel like if this is the type of thing, like once I start, I'd probably continue to do this long term.
Okay, so you might add money to it?
Yeah,
Okay, so let's just say a longer time horizon.
sure.
All right, so I think the first thing is figuring out if you're investing or trading, and it sounds like you're going to invest. So you don't kind of set it and forget it. Like you don't want to have to watch it every day or feel like you have to manage it.
Right.
We understand your risk tolerance. It sounds like you have a little bit of a higher risk tolerance, so you're okay with. You already understand that it might go down a ton. It's okay. You're looking at the long term. You understand that you don't need to take it out. You don't have to take it out. And investing essentially is, instead of going in and out of stocks and trying to make money and then flip them and then buy a new stock, what you're trying to do with investing is you're just trying to add to it and just dollar cost average over time. Mm-hmm. So you just have sort of like the fluctuations of the market. You just have a better average over time that'll allow you to essentially just increase whatever money you're going to make off of it.
Yeah.
So I think those are the main considerations to determine what you should potentially get in. What we do is we have a public account, and it's similar. So we both started with $5,000, and I put 10% of my initial investment in every month. So I put $5,000 and then I add $500 every month. Okay. He does $5,000 and he adds 10% of his earnings a month. So it's close.
But you keep adding to it.
But you keep adding to it.
I tithe to my
to
my trading account.
And so I'll let you start, and I'll say if you have any other questions or if you have your recommendation.
Do you want me to start with just like? Okay, I see what you're saying.
Yeah.
So,
I want you to start with your recommendation, but if you have questions.
Yeah, I was going to say, honestly, I think that you asked all the important ones. I think at the end of the day, there's probably 3 stocks that I would buy. Apple, Amazon, Apple, Amazon, Google, and or Facebook. I mean, I know it's like all the things, and that's probably like the typical answer, but it's so true. I mean, we just talked about Apple the other day about their year-over-year return. Average is like 30-40%. So I mean, you're making 30-40% on your money on average every single year, and as you continue to add to that, it just compounds. I mean, Apple's been doing it for 3+ decades, 4 decades. So like, you just that's something that I think is really safe. And if you have no idea how to invest, I mean, you just go with the stuff that you actually use every day. I mean, I'm sure that you I mean, I just saw you with your AirPods earlier. So,
Yeah.
you know, that kind of stuff is what you really kind of go after, and whatever makes sense to you. And we always say that, like, if you know, don't invest in something that you don't understand. I think you probably have a pretty good idea of what Apple is and what they
Right.
do and how they're growing.
Yeah, we've talked offline where I think if you got into the market, you'd really enjoy it because of just how you are. And I feel like the way you think and your business background, I feel like you would actually enjoy learning about the businesses. But I think the advice of things you believe in and you use is a great way to start for people. So if you love Nike, if they're best in class, Apple's best in class. Sorry, Green Bubble people. Apple's best in class. Nike's best in class, right? Thinking about Tesla. I love Tesla.
Yeah.
Like, those are the things. That's a great way to start. Diversification is always good. I think the biggest thing is just to like figure out what you believe in, and you got to really silence the noise, because once people find out you have a lump sum of money that you're like, oh, you got into investing, they're going to be like, you should buy this. And half the time it's crap. Apple is not sexy to buy because it just kind of, it's incremental compound growth.
Yeah.
So it's little growth, little by little, but that shit adds up. And before you know it, 5 years from now, it's grown,
Yep.
you know, 100% or 150%.
Yeah.
And that's the problem, is people want like the thing that's going to go up
big.
40% in a day,
Yeah.
but that thing could go down 60% the next day.
It's like drafting an offensive tackle in the first round. Like, it's not a sexy pick,
Yes.
but like it's going to pay dividends.
I like
long-term.
that.
Yeah,
Nice.
Apple
Yeah.
is the left tackle.